January 29th, trading FOMC meeting. Shaded areas just after market. Trading time after the market close from 4 o'clock to 8 o'clock. The dark shaded areas from 8 o'clock to 4 o'clock, and then 4 o'clock until market open at 9:30. So it was already coming down in pre-market. You have a crossover right here at this of the moving averages, and the blue line, green line, and red line. The blue line, green line, and red line means that the moving averages cross over the red, which is bearish. That happened in pre-market. It came down. It was up here around 605, came down to 603. You have the MACD down here at the bottom of the screen. It's below the zero line, which is just a straight line across. They got the green and red bars rising above and below it. Straight line is the zero line. Anytime the MACD crosses over the zero line, it's bearish, which was right here around 7 o'clock today on January 29th. It crossed over the zero line. You have a crossover between the MACD line, the yellow line, and the purple line. That's bearish. So, just trying to go over my trade for the January 29th, 2025 FOMC meeting day. Woke up a little late, around 6:45 or so. By the time I got to the computer, it was around probably between 9:50 and 9:55 maybe. Kind of did some homework on how the last FOMC meeting day went, December 18th. It pretty much traded sideways for most of the pre-FOMC meeting part of the day, from 9:30 to 2 o'clock. It did have, on the last meeting, it did come down in the beginning, but then it went up and pretty much stayed flat. And just traded sideways up until the meeting. So this is, as you can see, 12:08 at the top left corner. This is pretty much market open. You can see the time right here down at the bottom where I'm tapping at 10, 11, 12, 13. You see it went up to 6:04:38 right here, and it pretty much traded sideways until the meeting, and it just had a major drop. They did lower interest rates, but the guidance wasn't what everyone expected about slowing down on the interest rate cuts. So it dropped heavily. 12/18/2024, last FOMC meeting. So it just goes to show you can't always expect the next meeting to be the same as the one before. So I would just watch it this morning, January 29th, 2025, and because it was down, SPY was down, that's what I was trading. SPY is an ETF. I was waiting and waiting. And as you can see, there's resistance at this red line. That's the 200 mover EMA. but for some reason I thought it was going to break out past it, because I'm thinking, my train of thought was, if it's down before the meeting, then maybe there's a chance that the meeting is going to bring it up. So I got in at this yellow vertical line, this yellow dash vertical line right here at 10:42. So right there is where I got in. And the crosshair, or the yellow horizontal line, that's right there. That was the level where I got in at. Let's see if I can. Sorry. So, sorry y'all, first video, I'm just trying to figure this out. So, this yellow line right here is where I got in at. This yellow line is the price level that I got in at. And as you can see, as soon as I bought, look at me, got a red candle here, a big one here, and another big one here, pin bar candle. It came up, came right back down with another big red candle here. It never really got above that price level. I just wrong timing. And trade, if your timing is not on point, it could really throw everything off if your timing is not right. And all of this is just chop. I don't even know why I messed with it. I should have just kept watching. But sometimes you just sit there and trying to be patient. You just feel like you got to do something, or you try to outsmart the market and try to get in too early. And I took a loss because of that. Boom, right there. And it never really came back past that level. So, let me see where I got in at. And because I'm trading options, the only point where I looked like I was coming back to getting close to break even. I didn't get to break even right here, but I was getting close to it. So I'm sitting and waiting. Like I say, I got in over here. I got close to getting back to the same price level. But because I'm trading options, just because you get back to the same price level, especially ODTE, which I was doing, that don't necessarily mean that you're going to get back to the same break even on the option contract, just because you got back to the same price level on the stock chart of SPY here. Oh, that killed me. but it came back up. Did I sell it for a smaller loss? Nope. Went back down. Just chop it. I didn't sell it here. Came back up. I almost see that yellow dash line right there. Didn't get there, but it got close. Did I sell right there? Nope. I think I was down maybe like 20-ish% right there. And I was thinking like, okay, can we keep going? But as you can see, sit here waiting. Boom, boom, chop. And then it flushed, well, not flushed down, but chop its way down. And when you're dealing with options, the longer it take to get back to what you wanted, or the longer it take for you to reach your target, it slowly goes against you. And this yellow vertical line right here is where I sold. Finally made it work, and I was just like, I just got to take my loss. And I sold it at that bottom of that red candle, basically. And I wasn't looking at it no more. It went up, chopped its way back down, chopped its way back up. And I'm thinking I had pretty much was done for the day, that it wouldn't go back to touch that yellow line, which is the original price level I got in at. And it made it back up there while I wasn't looking, when I pretty much gave up on the play and just went to work. Of course, I can't, once I get to work, I can't really trade. So I missed that. That would have been like my last chance to sell for a smaller loss. But because I was at work, couldn't use your phones. So, and once I reached that, I did another yellow line here just to let myself know that you sold out at 1505, basically 1505, 1505, basically 305. I'm sorry, I don't really use military time that much, but and then basically 23 minutes later, the price pretty much doubled from the place where I sold. I could have took a lot less loss in 23 minutes because of that move there. And then after 3:28, market closed at 4 o'clock. It just sold off, and that option contract for 604 call ODTE went down to worthless, 0. So first time making a video, I'm really making it for myself. I'm trying to learn from my habits and my mistakes. You know, it's risk. Sometimes it's good, sometimes it's bad, but I really got to figure it out, because it's something I really want to do. Coming off a 3-day winning streak, the past 3 days, 3 trading days. Last Friday, today's January 29th. 28th was good, the 27th was good, and the Friday before that was good for me. Any day you don't lose is a good day, even though in my mind, I hate when I see my play carry out after I'm done and see that I could have made more money. Oftentimes that's what happens versus me getting out right on time in it. And I got, the most out of the opportunity. Still learning. So just want to encourage myself just to put in this work. Come back to this video and watch it myself. What I want to make note of is that 200 red line, 200 EMA was just like basically like resistance all day. Except for here. Nice candle powering past it. But it's pretty much resistance all day, and I should have been playing the put side instead of the call side. And 600 is a big psychological. That black line there, I made that for support. That's one of my support lines. 600 is a big psychological level. Could have played off the 600 level, rolled it back up, rolled it back up. That would have been smarter. That strong 600, that strong psychological 600 support line, black line, or seeing that the red line, the 200 EMA, was working as resistance pretty much majority of the day. And then maybe kind of had a confirmation in the pre-market when you see a crossover of those EMAs. Right here, that green line and blue line passing the red line in the pre-market around 7 something. That's bearish. You got a crossover right here, the yellow line crossing over the purple line, that's bearish. And then once both of those lines cross that zero line, the MACD zero line, and you got that red histogram, those red bars, that's bearish. And then once it crossed that, it goes down, down, down more, bearish in the pre-market. It didn't touch the white line, but that's pretty much rejection. 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 3 rejections. That third rejection, that would have been a good entry point for getting into a put instead of looking for the call, trying to time a call. It didn't make it, but I basically caught it right at the top of rejection when I first got into my option contract. So those are little lessons for me. Large red candle at the beginning of market open. Large volume red candle, meaning a lot of people selling. That could have been noted. Two, 3, 4, 5, 6. And then also once it got rejected from that red line 3 times, then the blue line 48 EMA, red line 200 EMA, green line 13 EMA, then the blue line started serving as resistance. Right here, right here, right here, right here. So it wasn't, when I said it started serving as resistance, it wouldn't get higher than the blue line because the blue line was resisting it going above it. Same way the red line resisting price, the candles price going above the red line, then the blue line starts serving as resistance. All right. That about wraps this video up for myself. Doing my homework. Try again tomorrow. We out.